Trane Technologies is reaching milestones with its stock price soaring to all-time highs and the company reaching a market cap of more than $94 billion. It's the latest focus of our new series, The Why Behind the High, where we're taking a look at companies whose stock is at or near record highs. Trane is among them, with its business focused on sustainable solutions for commercial climate and HVAC systems. Trane Technologies Chairman and CEO Dave Regnery joins us now. Dave, it's great to see you again as we look at the stock trading near record here.
Yeah, well, thanks for having me on your show again, Julie. I think every time I'm on your show, we tend to have a nice uptick. So I look forward to that today as well.
I like to hear that. You know, one of the catalysts that I was looking at as I was trying to figure out what has sort of been propelling you guys higher, one of the recent catalysts was the last earnings report, which was at the beginning of May. Revenue there up by 14%. And I know you saw demand really across all of your verticals, and you guys cover a lot of different areas from commercial to residential, healthcare, education. I want to ask about data centers because we talked about this a little bit last time. Last October, I tried to get my arms around how big that business is. You said you hadn't yet disclosed it. What can you tell me about the data center business and its importance to Trane?
Yeah, well, we still haven't disclosed it, so I won't tell you the size of it. But I will tell you that we're very strong in that vertical. But I would also tell you that we're very strong in many verticals, not just the data centers, which if you look at the first quarter, we had strong organic revenue growth, but yet our bookings still increased our backlog. So our backlog was up $500 million or 8%. And if you look across that backlog where we're building, it's really across many different verticals. So that gives me a lot of confidence that our teams are executing, and they're not just executing in data centers, but they're executing in many verticals for our customers.
And I do want to talk about those other verticals, but I'm going to linger for another moment in data centers, because I know there's a lot of competition in a lot of the verticals, but in data centers in particular, there's a lot of demand from the hyperscalers, as we know, who are building these things. And then there's a lot of jockeying amongst you and your competitors to offer those mainly cooling solutions for those buildings. So do you all feel you're taking market share there, or is it that there's so much to go around because of the data center boom right now that it's not that, sort of cutthroat, if you will?
No, I think it's certainly like any vertical. There's a lot of competition, and you have to be ahead of your competition. You have to be innovative and be able to do that. We've been strong in the data center vertical for decades, and we're going to continue to be strong well into the future. Let me give you an example of how we innovate. So this one just crossed my desk. We have a customer that I can't mention that's in Australia, and they have a learning data center. So it's a high heat data center, AI chips, and they want more efficiency. And in our world, we measure efficiency of a system by the coefficient of performance, or COP. And I won't get too technical on you, I promise, but the normal system in the HVAC world is a COP of 4 to 6. We developed a system for this particular customer where the COP is 10. That's really unheard of in our space. And again, it's this creative, thought process that we bring to the data center customers. We work well with their engineers. They like being in our labs and seeing what we can do. And we challenge each other. And when you do that, you come up with solutions that maybe you didn't even think were possible in the past that we've now demonstrated that we can deliver for our customers.
Right. So you guys are innovating alongside many of those clients. I want to turn to residential as well, because there too you were continuing to see demand. And it's so interesting to me because obviously we look at the housing market, at least here in the U.S., which is also your biggest market. And it's a tricky market right now. So where is that demand coming from within residential, and is it remaining consistent?
Yeah, I think through the first quarter we did very well in the residential business. I would tell you that don't look at a quarter in residential. Okay, you need to look over a longer period of time because some of our competitors have different ways to market, and they could be selling into a channel versus selling through the channel. But we had a strong start to the year, which is reassuring to us. We're seeing demand not necessarily in the new construction, because it's pretty obvious that's a little bit more challenged. It's really in the retrofit space. And let's face it, I mean, our distributors as well as ourselves, we've learned from last year that it was a very, very warm summer, and you need to make sure you have the right inventory levels so you can satisfy the customer demand when it hits.
And Dave, you mentioned the retrofit across your business lines. I'm curious how much you're relying on new construction and putting systems in new construction versus those retrofits that you're doing?
Yeah, in the resi space, it's less than 20% is new construction. In the commercial space, which is the predominant size of our business, it's probably more 70-30 there, 70 retro, 30% would be new construction.
And finally, I got to ask you about tariffs, because when you guys reported, the tariff outlook was unclear. It's still unclear. I guess you could argue it is less unclear. And you did talk about taking price where you were seeing tariffs and where you felt it was necessary. Can you give us an update on that assessment?
Yeah, I mean, as we said in the first quarter, we're a little bit different than many companies, right? We've had a strategy for decades here of in region for region. So we manufacture predominantly in the region that we sell. So for example, in the United States, we have 25 plants. About 95+% of what we sell in the United States is manufactured in the United States. And we encourage our supply chain to follow our manufacturing strategy. So we want them to be alongside us in the region in which we're manufacturing. As we said in the first quarter, look, the tier 2, tier 3 suppliers, we still have an impact. We sized it then at the 250 to 275, 250 million, 275 million. That number has obviously come down. We'll resize it when we announce the second quarter. And our first goal was to try to mitigate it. And if we can't mitigate it, we will use pricing actions to offset it.
And I guess to go back and sort of link it to the demand conversation, even if you're not seeing that huge of a direct hit, and as you say, it's lower now, what about among your customers, right? If they're building a new building, for example, they might be feeling it in different ways. So are you seeing any kind of changes in that sort of end market because of the tariff back and forth?
Yeah, I would tell you through the first quarter, we have not seen that. And you saw that with our order rates in the first quarter. Again, we built $500 million of backlog. Our backlog is at record highs at the end of the first quarter at $7.3 billion. So we haven't seen that impact. I think that, working with our customers, having them understand how we're trying to mitigate those tariff expenses for them on their behalf. We're not going to be making a profit center out of tariffs. I think it goes a long way, and the transparency that we're providing to our customers will be a win for the long term.
Dave, great to see you. Thanks for taking the time to chat with us.
All right, Julie, good to be here again. Look forward to a new high soon, okay?
Good luck. Take care.
Okay.